The dollar is trading marginally higher in trading here today versus three major currency pairs. The U.S. yields are up a little bit. The U.S. stocks are also up a little bit to start your trading day. I'll go through the technicals that are driving the three major currency pairs in this video. So let's get started. We'll start by taking a look at the euro versus US dollar on an hourly chart. And as you can see, the market price is a little bit lower, which means a little bit higher dollar. The low price that we saw right here came down to test the 100-hour moving average. In the last few days, the price has come down toward that level and found willing buyers against the level. Now the moving average is higher, making it an easy hurdle to get to and through. But nevertheless, we did maybe dip a pip or two below that level before bouncing back to the upside. The moving average currently comes in at 1.1350. The ECB is announcing their rate decision at 8:15, and the expectations are for a 25 basis point cut. So we'll see if the upside momentum that we've seen or consolidation up here near the highs can continue through that rate decision. And that rate potential cut. If they do cut and the price moves below the 100-hour moving average, we could see a rotation back down toward the 71 to 75 area, that around this area where I have it earmarked at 73-ish. We did move a little bit below it right through here, but I found couldn't get below the 100-hour moving average. The significance of that area, and it is an important level. If you go to the daily chart and you take a look at the high price out back here, this high price came in at 1.1275. The 61.8% retracement of this move to the downside comes in at 1.1271. So the 71 to 75 level is a support. And as you can see, we did try to hold support against that level a few days ago, but and bounced to the upside away from it. So getting below that level would open the door for further downside momentum. So keep that level in mind. If we get below it, I think the bias really starts to shift a little bit more to the downside as the buyers give up and the sellers try to take advantage of the little victory that they have from this technical failure to continue the momentum to the up. By the way, if the momentum does continue to the upside, despite maybe a cut of 25 basis points, or maybe they decide not to do anything, this area up through here would be the next key target area. This area comes between 1.1482 and 1.15158. So above and below the 115 level. Get above that level, and it opens the door for further upside momentum. Let's take a look at the dollar versus yen next. We'll look at the hourly chart to start off with. And as you can see, the low prices yesterday and today came down to this swing area right here between 141.64 and 141.94. If I go to the 4-hour chart and take a look at where that emanated from, I have to go all the way back to this area right through here. You can see where it was a floor, it was a floor, it was a floor, it was a floor before moving to the upside. So it had some significance, and the price came down to that level, found willing buyers against the level, and pushed back to the upside. The move to the upside has now seen the price move up. If I go to the hourly chart to the moving average, the 100-hour moving average, we did move a little bit above that level, 142.90, but could not sustain the momentum and rotated back to the downside. If we are able to get above that 100-hour moving average and stay above that level, it would be the first time in a little bit over a week. So that would be something somewhat positive. But there would be work to do. Taking out the old highs right through here would be one, and then getting up toward the 200-hour moving average would be another. The 38.2% retracement of this move to the downside is still well higher at the 144.47 level. As the next, as a 38, actually 145.31 is the 38.2% retracement. So the 238.2 are the next key targets, along with maybe these old highs going back over the last week or so of trading. Finally, let's take a look at the sterling versus US dollar, and take a look at the hourly chart. And as you see, the market broke above this swing area. Try to make sense of it by going back in time. We go back to this area right through here. We broke above that level, and we could not get up to the next target up here, 133.12. We started to rotate back to the downside, and you see this high price from 2 weeks ago. That level pretty much did a good job of holding support down here at 1.32067. You can see that more closely off the hourly chart. I'll go back to that, and here's that old high. And the low prices in trading here today dipped a little bit below it, twice, rotated back to the upside, back to the swing area. So there's a little battle going on between swing area up here with a high at 132.45. And the 132.067 level, of course, rising 100-hour moving averages come into play right here as well. So be aware of that. We're going to need to get below both those levels to increase the bearish bias on the top side, get back above the 132.45, and we make another run to the upside, another run toward those upper targets, including the 133.12 level off of the 4-hour chart that we saw just a little bit while ago. So there you have it, a look at 3 major currency pairs to kickstart your trading day. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.